now will come in to help you to find a precise.
Hello, smart trader out there. There's a concept I want to talk about today, which is the CRT concept. You understand? A lot of people find it difficult to map the CRT that is valid, and it is because they are afraid to understand one of the important concepts, which is the basic concept, of course. You understand, which is the structure. You have to understand that the CRT must be in conjunction, must be in agreement with the price structure, the overall directional bias before it will work, right? You understand? So you don't need to map it in any random place. If you want the precise entry on your chart, then you should equally have a great narrative of the market. And how can you get a great narrative? You can only get the narrative when you understand the directional bias through price structure, right? So let's go to my screen and show you how you can get this thing effectively.
Here on my board, you can see a breakdown or an infographic of how to map your how to mark up your CRT, the CRT that will work, the valid CRT. A lot of traders jump into the market and marking any level or marking any candle, any set of candlestick as their CRT without putting into consideration the overall trend or the bias of the market. You understand? Structure is the king. If you miss the structure, which is the basic, yes, it is the basic, but a lot of traders still find it difficult to incorporate it with their trading. You understand? If you find it difficult to put structure in conjunction with other strategy, you will find it difficult to excel in this market. You understand? So why does the setup or why does CRT setup fail? Why does CRT fail? You understand? Let me correct this thing. Let me correct it. So why does CRT setup fail? This is what I wanted to write, you understand? Why does CRT setup fail, you understand? It fails because CRT markup fails because traders fail to understand the the direction, you understand, the direction of the market, you understand. So it is very, very important that you have to understand the direction of the market. You don't just jump into the market and start marking CRT, you understand. It will fail, you understand. So you have to have the bias of the market. And how can you form the bias of the market? Let me go down and show you how you can find the bias of the market, right? If you look at this structure, you can see that at every given moment, the market is breaking structure to the upside. You understand? Once the market have a higher highs, it pull back again, and the momentum to push up will equally break out the previous high. You understand? So at any given moment, we have been seeing the market breaking structure to the upside. So that's give us that clue that okay, the market is in an uptrend, right? So we have now have a definite, a well-defined structure. You understand? We have a defined structure, a defined bias that okay, the market is going up now. So this is where the CRT now will come in to help you to find a precise place to enter the market. So if you want to find a precise place to enter the market and continue the trend, you want to wait for the market to have a liquidity sweep. This is the first liquidity sweep right here. You understand? And at this level, you can mark up your CRT. You understand? So you can mark up your CRT at this level. So I have a kind of a setup where I and enlarge it so that you will see what I'm talking about. This CRT here, it should be found around this level. So in the CRT you are going to find, mind you, it should be a bullish CRT because the market is of course in an uptrend, just like I told you before that you don't just come up and be marking CRT anyhow. If you mark a CRT that okay, the market is going to sell around this level, you understand? But because you do not put into consideration the overall trend or the overall bias of the market, you discover that the market will just sell a little bit and turn it to turn against you and take you out of the market, hit your stop loss. So in order not to have this kind of scenario, you have to mark your CRT to follow, to be in conjunction with the overall trend. You understand? So in this case, you mark your CRT, maybe the last candle that give rise to this liquidity sweep right here. You mark it, mark the high. This is the CRT high, and this is the CRT low, right? You understand? So you mark it. Then the next candle, which will come up as maybe an inverted hammer, for instance, will close within the range. So the third candle now will continue giving you the push to the upside. You understand? This third candle now will give you the push, and you see the market printing towards the upside, printing bullish, impulsive bullish candle towards the upside, and that is the place you want to enter the market and continue. You understand? The moment this third candle closes as a bullish candle, you just enter, place your stop loss below it, maybe on the 15-minute time frame, for instance. Then you push towards the upside, targeting any of the recent high, you understand, or the liquidity above, you understand. So if you do this thing religiously, like you follow it sacredly, you are going to be far ahead of the major player in the market, or the major trader in the market. You understand? And for context, let me go to my chart and show you that this thing actually works in the market, right? So this is a good example. In this our ID model that I just showed you, we use a bullish scenario, and I'm just trying here to tell you that it is not limited to bullish scenario. You can equally see it in the bearish setup, right? So let's go to the bearish setup. Let me show you. So this is the bearish setup for context. You understand? If you look at this place critically, you will discover that these are the CRT that went through successfully, you understand? Because overall trend is downtrend. You can see at any given moment, gold have been breaking structure towards the downside, right? You understand? It broke structure here, returns back again, continue breaking structure, right? So look at it, break structure around this level. You understand? Broke structure here, the next moment again, we pull back again, break structure aggressively again. So that shows that the overall trend is the downtrend. So if you want to find your precise entry using CRT, this is where this thing get interesting now. Look now, this is an example of CRT, a bullish CRT, a bearish CRT, for example. So if you look at this candle and mark the high, this is the candle I'm talking about for context, right? This is the candle. So this is the candle, this candle right here. You understand? And mark the low, you understand? This is the low and this is the high of the candle. You understand? So the next candle, which is the second candle, swept the liquidity above and closes within the range. You understand? So signifying that the seller are in the market. And the moment you enter from here, you will be you'll be amazed that you hit your TP with precision, very precise. You understand? Look at it. The moment you enter from this level, boom, you discover that you hit your TP without any delay, right? You understand? Just 10 pip, let's say, yes, on good, right? So you can even use maybe 60 pip stop loss, you understand? Very precise. The risk to reward ratio when you are using CRT for your entry, especially when the CRT is in agreement with the overall trend, it is very large. The risk to reward is large, you understand? So this is how to enter this in. So this first one is very good. It's a valid CRT because it agrees with the overall trend. Look at the second one now. You understand? This is another second example, right? If you look at this candle, we marked the range, the high. This is the high. This is the high of this candle, right? This is the high. This is the low, rather. You understand? And this is the high or the above. Let me mark the high as well. So this is the CRT high for that candle. You understand? So this is the range, right? So what happened? What you see next? The next candle, the second candle. You of course there are some time, there are some exclusion, there are some exclusivity. You will not see the second candle sweeping the high of the first candle majority of the time, but you have to use your logic and your understanding of the market to flow with it, especially if you know that the overall trend is a bearish trend. So the moment the second candle printed as a hammer, as a hanging man, for instance, so we now enter the market from the third candle, right? So and it was a very precise entry. So that is one thing you need to understand about CRT. It gives you precise entry of the market, especially when it is in agreement with the overall trend. And boom, what you see the moment you enter with the third candle, boom, you hit CP straight. You understand? So if you let me this is an example of a failed CRT because it is not in agreement with the overall trend. So this is an example of a failed CRT. So we mark the range of these guys. Some traders, some amateur traders will go and mark the range the CRT high of this bearish candle, you understand? They'll mark the CRT high and equally mark the CRT low, believing that this next candle, which is a bullish candle, will now push the third candle above and the market will go above. But because they fail to understand the direction of the market, the overall direction, it will never work. And that is why this type of CRT fails. So you can now agree with me that if the CRT is not in agreement with the overall trend, it will never work. You understand? So you have to be in agreement with the overall trend. So that is why I always say structure is the king. Learn backtest, learn how to mark structure very well. Know your bias, know how to use your structure to form a narrative. You understand? Once you know the narrative, the price is telling you the story, and once you can interpret the story behind the movement, you can equally use any other strategy within the price action and you come out clean, right? So this is an example. I'll go on and on and show you another example. For example, let's talk about Euro USD, for instance. So this is Euro USD. So if you look at this trend of Euro USD, if you look at this trend of Euro USD, it is a downtrend because at any given moment, Euro USD have been breaking structure to the downside. Look at it after the change of character here, right? You understand? After the change of character, what do you see? Boom, the market keep printing towards the downside, break structure, continue breaking structure, and so it's an obvious downtrend. So it will not make any logical sense for you to be marking CRT to push the market to the upside. So that is why this particular CRT phase, you understand, because they mark the high and the low of this candle, thinking that since the bullish candle end within the range, the market will continue towards the upside, and it goes towards the upside a little bit, but what you see, it fails aggressively and push the market price towards the downside. So you have to be in agreement with the market, you understand? So if we were to follow price action here and do our CRT, you will discover that this particular CRT, if you mark the high of this candle and the low of this candle and the high of this candle, you will discover that it will come out very clean. You understand? Because it's in agreement with the overall trend, right? So this is what I have for you. And if you are coming across this channel for the first time, kindly subscribe, like, and share this video with your friends who are actually struggling. We have a community as well, a community of like-minded traders like you that come together and help themselves. So you don't want to miss out. Join them and let us help ourselves grow together. Thank you.